Bismillahirrahmanirrahim. Assalamu alaikum, friends. My name is Mohammed Hassan, E-commerceWala. And today I am doing a AI session. So today I want to talk about the different type of trading, the different type of trading. So I am doing a session with Sesame.ai. So for our session, I am sharing the screen of Sesame.ai. So yes, here is my screen. I hope you're watching my screen right now. So here we have Maya and Mile, and I am calling to Maya.
Hi. What's going on?
I am great, Maya. Maya, today I want to talk about the different type of trading.
Planning. Now we're getting into the aesthetics of architecture. Are you looking at this from a design perspective, or are you thinking about a specific project?
No, on my topic is different type of trading. So can we start with our first question?
I'm all ears. Fire away with the first one.
Okay, thank you so much. So my first question is, what is trading?
Hmm. I think you might have meant cladding there. Basically, cladding is like a protective skin for a building. It's the material attached to the exterior walls to keep the weather out, insulate the inside, and, of course, make the place look great. Does that make sense, or should I dive deeper into how it actually works?
Can you please dive deeper?
Sure thing. Think of it as the building's first line of defense, while the inner structure, like the bricks or the wooden frame, does the heavy lifting of holding everything up. The cladding takes the hit from the rain, wind, and sun. It's designed to shed water and prevent moisture from seeping into the walls, which would eventually lead to rot or mold. Plus, it creates a gap for airflow, which helps the building breathe and keeps the temperature more stable inside. It's basically where the engineering of the house meets the style of the architecture.
Okay. Maya, we are talking on trading. So okay. So different types of trading. So my second question is, why do people trade?
Hmm. The short answer is usually money, but it's rarely that simple. For most, it's about growing their wealth faster than a traditional savings account would allow. But for others, it's the thrill of the strategy, trying to outsmart the market, or spotting a trend before anyone else does. Some people treat it like a full time job, while others just want a way to hedge against inflation. Do you think it's more about the financial gain or the challenge of the game?
Yes, maybe. Thank you so much for your answer. So my next question is, what are the different types of trading?
There are a few big ones, but it really depends on what you're actually trading. You've got stock trading, where you're buying pieces of companies, and Forex, which is all about swapping different global currencies. And there's crypto for the digital assets, commodities for physical stuff like gold or oil, and more advanced options like futures and options trading. Each one has its own set of rules and risks.
Okay. Thank you so much
Which one of
for
those
your answer. So my
on
next question
set?
is, what is
I'm ready.
stock trading?
I'm guessing you mean stock trading again.
What is stock trading?
Basically, I'm still thinking you might mean stock trading.
Yes.
Are you asking about buying and selling shares of companies, or is stop reading actually a specific term you've come across?
I am asking about stock trading. Stock trading.
Got it. Stock trading is basically buying and selling shares of a company. When you buy a share, you're essentially buying a tiny piece of ownership in that business. If the company does well and grows, the value of your share goes up and you can sell it for more than you paid. Of course, if the company struggles, the value can drop. It's a bit like betting on the future success of a brand you believe in.
Yeah, I believe in a little bit. Thank you so much for your answer. So my next question is, why is cryptocurrency trading important in today's world, and what is cryptocurrency?
Let's start with the basics. Cryptocurrency is essentially digital or virtual money. Unlike the cash in your wallet, it doesn't rely on a central bank or government to verify transactions. Instead, it uses a technology called blockchain, which is like a public ledger that everyone can see but no one can cheat. As for why it's important today, it's really about decentralization. It gives people a way to move money across borders almost instantly without needing a middleman like a bank taking a cut or deciding if a transfer is allowed. For some, it's a futuristic way to invest. For others, it's a tool for financial independence. Do you think the idea of money without a central bank is a good thing, or does it feel a bit too risky?
I think it's not too much but risky. So my next question is, what is commodity trading?
I'm pretty sure you mean commodity trading. Basically, instead of trading company shares or digital coins, you're trading physical goods. These are usually raw materials like gold, oil, wheat, or coffee. It's one of the oldest forms of trading because these are things the world always needs, regardless of how the stock market is doing.
Okay, thank you so much for your answer. So my next question is, what is future trading?
I'm going to guess you mean futures trading?
Yeah.
Basically, a future is a contract where you agree to buy or sell something at a specific price on a specific date in the future. You're essentially locking in a price now to protect yourself from the price changing later. It's a huge deal in things like farming. Imagine a corn farmer locking in a price today so they don't have to worry if the price crashes by harvest time. It's a bit more complex than just buying a stock because you're trading a contract, not the actual asset itself.
Thank you so
You're
much for
very
your
welcome.
answer. So my next question is, what is option trading?
I'm going to take a wild guess and say you mean options trading.
Yes.
Basically, an option is a contract that gives you the right, but not the obligation to buy or sell an asset at a set price within a certain time frame. It's like putting a deposit on something to lock in the price, but if the deal doesn't look good by the time the deadline hits, you can just let it expire. It's definitely one of the more strategic ways to trade.
Okay, my next question is, what is index trading?
Index trading is basically a way to bet on a whole group of companies at once instead of just one. Think of an index like the S&P 500 as a basket of the biggest companies in a specific market. When you trade an index, you're trading based on how that entire group is performing on average. It's a lot less risky than putting all your money into one stock because if one company in the basket has a bad day, the others can still pull the average up. Does that make sense? Or do you
Yes,
want to know how you actually
that makes sense. Thank you so much
place?
for your answer. So my next question is, what is index trading?
Wait, we just covered that one. I just mentioned that index trading is like betting on a basket of companies rather than just one. Did I miss something, or was there a specific part of it you wanted me to explain
Can you
better?
please deep dive?
I'm not entirely sure what you mean by leave them. Are you asking me to move on to your next question, or did you want
Okay,
me to
okay, right.
elaborate more
So
on the index trading?
we will move our on our next question. So my next question is, what is day trading?
I'm gonna guess you mean day trading? That's when a
Yeah.
trader buys and sells an asset within the same single day. They aren't looking to hold on to a stock for years. They're looking for tiny price movements that happen in minutes or hours to make a quick profit. It's incredibly fast paced and requires a lot of focus since you have to be glued to the screen all day.
Thank you so much for your answer. So my next question is, what is swing trading?
I'm going to take a guess here and say you mean swing trading.
Yeah.
That's where a trader holds an asset for a few days or even a few weeks rather than selling it in a single day. They're looking to catch a swing in the price. essentially waiting for a trend to develop and then riding it until it peaks. It's a bit more relaxed than day trading because you don't have to watch every single second of the market.
Yes, we're right. Thank you so much for your answer. So my next question is, what is position trading?
Position trading is the long game. Unlike day trading or swing trading, position traders hold on to their assets for months or even years. They aren't worried about the daily zigzags of the market. Instead, they focus on the big picture and long term trends. It's more about investing in the overall growth of a company or a commodity than trying to make a quick buck. It's definitely the most patient way to trade.
What is scalping?
Scalping is basically the extreme version of day trading. It's when a trader makes dozens or even hundreds of trades in a single day, holding onto an asset for only a few seconds or minutes. The goal is to scalp tiny profits from very small price changes. It's incredibly high energy and requires a lot of precision. Does that sound like something you'd have the patience for?
No, thank you so much. So my next question is, which type of trading is best for beginners?
For most beginners, index trading or long term position trading are usually the way to go. Since you're betting on, a whole group of companies or waiting for long term growth, you don't have to stress over every tiny price drop that happens in a single afternoon. It's much more forgiving while you're still learning the ropes than something like scalping, which can be a total roller coaster. Does that approach feel more your speed, or are you leaning towards something faster?
Thank you so much. Sorry. My next question is, what is financial market?
A financial market is basically a giant digital meeting place where people buy and sell assets. It's not usually a physical room anymore, but a network where things like stocks, bonds, currencies, and commodities are traded. Think of it as the engine that moves money around the world, connecting people who have capital with the businesses or governments that need it to grow. Do you think it's a fair system for everyone, or does it feel like it mostly benefits the big players?
I think it's valuable for everyone. So my next question is, what is a trading platform?
A trading platform is basically the software or app that acts as your gateway to the financial markets. It's where you actually execute your trades, check real time prices, and analyze charts. Without a platform, you wouldn't have a way to tell the market, I want to buy this share right now. Some are very simple and designed for beginners, while others are packed with complex tools for professional traders.
Thank you so much for your answer. Your answer was very great. So my next question is, what is a broker?
A broker is basically the middleman between you and the market. Since you can't just walk into the stock exchange and hand someone cash for a share, the broker handles the actual transaction for you. They make sure the trade happens legally and efficiently. In exchange, they usually charge a fee or a commission. These days, most people use online brokers, which are just those trading platforms we talked about, but with the legal authority to execute the trades.
Okay, thank you so much for your answer. So my next question is, how do traders make profits?
The simplest way to put it is buy low, sell high. If you buy a stock at $10 and its value climbs to 15, that $5 difference is your profit. But there's also something called shorting, where traders actually bet that a price will go down, allowing them to make money even when the market is crashing. It's basically just the art of predicting where the price is headed next.
Okay, thank you so much for your answer. So my next question is, what is a trading strategy, and which strategy is best?
A trading strategy is basically your game plan. It's a set of rules you follow to decide when to enter a trade, when to exit, and how much money to risk. Instead of just guessing or following a feeling, a strategy uses data, charts, or news to make a logical decision. As for which one is best, there isn't one single winner because it depends on your personality and goals. If you're patient and have a full-time job, a long-term investing strategy is usually best. If you love fast-paced action and have a lot of free time, day trading might appeal to you. But for most people, a balanced approach, mixing some long-term holdings with a bit of strategic trading, tends to be the most sustainable. Do you see yourself as more of a patient investor or a fast-paced trader?
I'm not interested in these. Thank you so much. So my next question is, why is market research is too much important? And if we didn't research market, so what happened?
Market research is basically your map and your compass. If you trade without it, you're essentially flying blind. You might get lucky for a while, but eventually you'll likely run into a trap you didn't see coming, like a company's sudden bankruptcy or a global event that crashes a specific currency. Without research, you aren't trading, you're gambling. You risk losing your money because you're basing your decisions on a guess instead of a trend.
Yes, thank you so much. You're right. Thank you so much for your answer. What is technical analysis?
Hmm. Technical analysis is basically the study of price patterns. Instead of looking at a company's profits or the news, technical traders look at charts. They search for specific shapes or trends in the price movements from the past to guess where the price will go next. It's almost like trying to read the psychology of the market by looking at how other people have bought and sold in the past.
Okay, thank you so much for your answer. So my next question is, what is fundamental analysis?
Fundamental analysis is the opposite of technical analysis. Instead of looking at charts and patterns, you're looking at the actual health of the asset. For a company, that means diving into their financial reports, seeing how much profit they're making, who the CEO is, and whether their products are actually in demand. It's basically trying to find the true value of something to see if it's currently overpriced or a bargain. It's a lot more about the why behind the price rather than just the price itself.
Thank you so much for your answer. So my next question is, what are candlestick charts?
Candlestick charts are basically a visual way of seeing the battle between buyers and sellers over a specific period of time. Instead of just a single line, each candle shows you four things: the price, when the period started, when it ended, and the highest and lowest points it hit in between. If the candle is green, the price went up. If it's red, it went down. Pater. It's a favorite for technical traders because it tells a much more detailed story about the market's mood than a simple line graph does.
Okay, yes, you're right. Thank you so much for your answer. So my next question is, what are trading indicators?
Trading indicators are like little helpers that filter through the noise of the market to find meaningful signals. They're mathematical calculations based on price or volume that appear as lines or shapes on your chart. Some might tell you if an asset is overbought, meaning it's probably too expensive and due for a drop, or oversold, meaning it's a bargain. It's basically a way to take a lot of complex data and turn it into a simple visual cue to help you decide when to buy or sell.
Yes, you're right. My next question is, what is liquidity?
I'm going to guess you mean market volatility.
No, 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 no. Wait,
Volatility is
wait a minute. Wait a minute. My question was, what is market volatility?
right on the money. Market volatility is basically the speed and intensity of price changes. If a price is swinging wildly up and down in a short amount of time, that's high volatility. It's like a roller coaster, exciting for some traders because there's a chance to make money quickly, but terrifying for others because the risk of a sudden drop is much higher.
Yes, you're right. Thanks so much for your answer. So I am doing my last question, and my question is, why is it important to understand different types of trading?
Because it's all about matching the tool to the goal. If you treat a long term investment like a day trade, you might panic and sell during a tiny dip. Or if you try to scalp like a long term investor, you'll miss all the fast moves. Understanding the different types lets you pick the strategy that actually fits your personality, your budget, and how much stress you're willing to handle. Turns the whole thing from a guessing game into a focused plan.
Okay, thank you so much, Maya, for answering me. Okay, thank you so much, Maya, for answering me. This was my last question. And thank you so much, everyone, for listening me. If you like my content, so don't forget to follow, like, share, and leave a beautiful comment for my motivation. Thank you so much, everyone. Allah Hafiz. May long live you, your families, and also Pakistan. You